All right, so good afternoon, everyone. Welcome to the pre-series of webinars hosted by Ashwa Legal Advisors LLP. So just to give a background or brief profile about Ashwa Legal Advisors, uh, this firm was founded in 2017 by our founder and partner, Advocate CA Dr. Avinash Podarji and Advocate CA Anchal Podarji, and other partners in the firm being Mr. Shalin Dosi, CA Ashu Dalmia ji, CA Shefali Girdarwal, CA Vishal Poddar, myself, Advocate CA Pramod Dokania, Advocate CA Amish Desai ji, and Advocate CA Avdesh Sharma ji. We are a national level boutique law firm providing legal assistance and litigation support in the areas of taxation, both indirect and direct taxation, PMLA, Benami, all corporate laws, including Companies Act, IBC, SURFACI, and other statutes, and related litigation and legal services. Our offices primarily are Surat being head office, and other branch offices include Mumbai, Delhi, Pune, Ahmedabad, Nashik, Vadodara, Faridabad, Gurgaon, Rajkot, and other associate offices across India. We have a unique network associate policy wherein we partner with our associates to give and take both in terms of assignment and knowledge transfer, including hand-holding wherever required. In case you are interested and need to know more details, you may get in touch with any of us partners offline. With that brief introduction, I think we'll start our today's session. So Vishal bhai, you will be sharing the screen, or I should share? I'll share the screen. You can see my screen?
Yeah, I think you have to make it to PPT mode.
Yeah.
So I'll just give a brief introduction of the topic before Pramoji starts with the provisions. So as we all know, 1st April 2025 has been appointed as the date for the mandatory application of the ISD provisions. So basically ISD, that is Input Service Distributor concept, has come from the service tax and the central excise era. In that particular tax and the central excise credit, which was at that time called as Senvat credit, got merged. That is, both were allowed cross-functional set off of their credits. At that time, the central excise had this provision whereby units were getting registered separately, and there could be one head office where different types of services which were received on which service tax was leviable, the credit was getting accumulated with that head office. And since the head office was not a manufacturing unit, it was not able to consume the credit. So in order that this credit could be utilizable by the manufacturing units which were placed across India and having separate registration under the central excise, this concept of input service distributor was introduced, whereby the head office could register itself as a separate identity called as an input service distributor, and whatever input service invoices were being received and the service tax credit, which was at that time called as the Senvat credit, was being received by this head office, could be distributed to all the various units. Now the same analogy was continued in GST, and in GST, because of introduction of Schedule 1, we have a very controversial issue, which is the cross-charge issue, which is under litigation in many of our own writs. Now, there was a circular number 199, which tried to resolve the conflict between ISD vis-a-vis the cross-charge, that is when which one should be applicable, or whether one is optional, or whether the other one could be used exclusively. At that time, the circular had said that ISD was not compulsory, and that was the correct position before 1st April 2025. In the 50th GST Council meeting, they had proposed, this was the meeting where the circular was proposed to be introduced. In the same meeting, they had proposed that in future, ISD should be made mandatory prospectively. And then in the 52nd GST Council meeting, which led to the amendments in the Finance Act 2024 brought in the concept of the present ISD provisions, which we are going to deep dive today. Most importantly, now from 1st April 2025, since the ISD provisions have been made mandatory, the biggest challenge, firstly, when we talk about compliance for the uh, existence entity, multi-existence means who have multiple registration under the same PAN. For them, the biggest challenge is to first segregate as to what expenses they would consider under ISD mechanism and what expenses they would still continue to cross-charge. This is where the litigation will also start. Plus, the entire concept of ISD, how it has been designed today, itself has certain inherent issues which we will try to discuss today so that it could be a value added to all the present participants. So with this brief introduction, I request Pramodji to start with the basic provisions of the ISD. Pramodji.
Thank you, Vishal bhai. Okay, so Section 260, subsection 61 of CGST Act defines Input Service Distributor, which is ISD, and it means an office of a supplier of goods or services or both, which means an office of the supplier of goods or services or both, which receives tax invoices towards the receipt of input services, including the RCM supplies, which includes goods and services both, whatever is defined in Section 9 of CGST Act and Section 5 of IGST Act. And those input services should be for or on behalf of distinct persons referred in Section 25, which defines what are the distinct person that needs to be registered in GST. And the ISD would be the office which are liable to distribute these input tax credit in respect of such invoices in the manner as prescribed in Section 20 of the CGST Act. This is a brief definition what is given in Section 2, subsection 61. So here there are some questions.
So firstly, don't go to the questions, Pramodji. Let me have some discussion on the basic provision first. So as you all can see on the screen, this is the latest amended definition amended by the current finance bill also, whereby they introduced section 5, bracket 3 and 4. Now, there are a few important points which I just want to highlight before we can deep dive. In service tax, the basic ideology was that only a head office was the one who would be registering as ISD. Now, if you observe the terminology that is used in this section 261, it uses the term an office. So now it need not be your head office only. It could be any office of that particular supplier. First important point. Secondly, who is receiving the tax invoice? So it need not always be a head office. So the basic ideology is that wherever any of your, let us say, we take an example, you're a company having existence in 10 different places. You are assuming 10 different states. All are your distinct persons as per section 25. Now, any of these places, maybe one of them can be head office, let us say placed at Delhi, but that head office or any other office which is out of these 10 can be considered as ISD if it is receiving an invoice for common input services. So what is important to be noted, many times this question is coming to us that whether it will be head office only, answer is no, it can be any office. Second important point, you may already be having a registration under GST because that is already required. For ISD, you need a specific separate registration. Now, the most important point is from 1st April 25, they have made ISD compulsory. How? As you can see in the last pointer, it says, and liable to distribute the input tax rate. So somehow they are giving this as a mandatory point. This we get to know even further when we go to section 20. Now here, Pramodji, just put the highlighted questions. Now here I have the first poser in this. The definition simply says an office which receives the tax invoice. Now we come to some practical issues. There is a possibility that in the initial period, you may not have given this ISD number to your supplier. Many times it may happen that you forget to give the ISD number to the supplier because you have just newly taken this number. Secondly, it may happen that you may have multiple ISD numbers. Firstly, whether it is possible, answer is yes, because I just explained only head office cannot be ISD, need not be ISD, it can be any office. Now your 2-3 offices are searched. Let us say the Mumbai office, the head office, which is at Delhi, maybe another office at Ahmedabad. These 3-4 prime locations are where common expenses get booked as per your accounting policy. Now, you may have 3 or 4 ISDs also as per your requirement. Now, there is a possibility that a wrong GST number is communicated to your supplier. So, my first poser is, what if invoice is wrongly raised in that ISD instead of another ISD or regular office? In short, let us say my Delhi ISD is receiving an invoice for some common service. Question is, that particular invoice should have been either raised in the name of some other office, or it should have been raised in the name of, let us say, Mumbai ISD. First point is whether this particular ISD can go ahead with this ISD distribution mechanism even for this wrongly received invoice, or it should go for the amendment and correction of this particular point. So I'll request for Shefali ji to share her views, and then if there are no disputing views, we'll proceed with this. Shefali ji, you have to unmute yourself. You are not able to unmute. Yes, I think now you're unmuted.
Thanks, Vishal ji. So that's very important question because it's very natural. Like when you have having the multiple ISDs, it's very natural to happen that the invoice of one ISD is in the name of another ISD. But I will say, let us look into the transaction first because it's not new. Like we are discussing this particular point related to ISD, but this kind of mistake is not new in GST. Like earlier also, this has happened in many cases that the invoice which was belonging to one say GST number, and by mistake the GST number of other distinct person of the same entity is being mentioned there, and we can find many judgments in this regard that you are you have the right to amend this particular mistake if that happens. So if it is actually a mistake, so how we will be able to know that if the basic agreement was with one ISD, but by mistake I have mentioned the GST number of another ISD. So first and foremost thing is, on the basis of all of those judgments, we can say that the SSC should have right to amend that invoice. Like even if it is time barred or even if it is not allowed by the portal, but still they should be allowed to correct their mistake, rectify their mistake. Now the another point is that I was not even aware of the mistake, and the ISD in whose name or whose GST number was mentioned on that particular invoice, they already received it. Because if they come to know about this before the distribution of input tax credit, that's a different case. They will correct it in their next return or whatever. But if we come to know about this kind of mistake after say 2 or 3 years, that is what generally happens many times when you are conducting your audits, or when say statutory audit, or maybe department is conducting the audit like after 2 or 3 or 4 years, and at that period of time you come to know about the mistake. What should be the course of action, what we'll be able to do? So if we come to know it about in the earlier period, we can correct it. Right now that's a different issue, like portal will allow it or not, or even for that we will have to file the writs, because for basic things we, like many times even for registration you have to file a writ. So that will be a different case, but ideally it should be allowed to correct your mistake. Now if that is coming into the picture after say 3 or 4 years, when it's actually too late and I have already distributed, I will say there is no loss of revenue. First thing is. Second thing is, even at that period, when I come to know about my mistake, I should be allowed to either rectify it, or I should be given an immunity from the consequence of that particular mistake. So I will say first thing is, at this point of time when none of those mistakes has actually happened, first of all we should try to make our procedures apt so that doesn't happen. Secondly, if that happened in a short time span and we came to know about a short time span, then we should try to correct it. But if it's actually 2 or 3 or 4 years, then also we should have immunity from any penalty or any adverse consequences related to this particular matter. That's my view.
Ashu bhaiya, you want to add something on this? Okay. So I concur 100% with Shefali ji's view. So my understanding is also same. So firstly, if it is correctable, it is better you get it corrected and get it booked in the right ISD. Even if it is not correctable, I still believe that there is no harm as what Shefali ji said, because ultimately I understand ISD is only a pass-through mechanism. So if I understand the genesis of ISD, the basic ideology is what you cannot give directly to a particular branch for some reason, accounting reason maybe, or some other reason. Many times it is so decided that all the vendors will be raising invoice on the head office only. There are many times such internal understanding. So in such a case, even if it is raised on the wrong ISD, instead of Delhi ISD, it is raised on Ahmedabad ISD, there should be no problem, because ultimately Delhi also would have applied the same turnover ratio which this Ahmedabad ISD would be applying. If, let us say, it was pertaining to one individual unit, let us say Nasik, but wrongly raised in Ahmedabad ISD, no problem. ISD is allowed to give the entire credit to that individual branch also. So even if it is wrongly given to the ISD, so far as it is pertaining to this entity, this particular PAN, I think there should not be a problem as far as the law side is concerned. I'll request the panelists if anybody wants to counter this with any special insights, or we can take up the next poser. No, Pramodji, you can go to the next poser, please. Yes, now this I think could be a very long going issue, because ISD will be applicable where one of the office is receiving invoice and it is saying that it is pertaining to input services, but it is for on behalf of your other entities under the same PAN, which is called as distinct person. So now here I have this question mark as to how this for or on behalf could be interpreted. And I also believe that this could also be the main distinguishing factor between an ISD and a cross charge. So I think we should spend some time in deliberating as to what will be the meaning of this particular phrase, for or on behalf of a distinct person. So I'll first put my views and then I'll take it to the panel. So what I understand from this particular phrase, because it is a phrase commonly used in multiple provisions, that where it is saying that the input tax invoice or the invoice for that particular input service is for or on behalf of my distinct person. Distinct persons are the other registered entities under the same PAN. It simply means that the consumption of this service, or let us say the benefit of this service, is enjoyed by the other distinct persons also. But as I mentioned earlier, for some accounting purposes, the invoice was raised in the name of one entity, which may be the head office or which may be any office which is registered as the ISD. So this was what I can understand is, in the very simple words, the meaning of for or on behalf of, that is where your distinct persons are the beneficiaries or are the actual consumer of that particular input service. Yes, Shefali ji.
Yes, Vishalji. Here the one important thing we all should take care is it's talking about receiving of invoice, right? And the only one formula you will put in any case, and you will be able to understand whether we should ISD that particular service or not. The thing is, if service is received and consumed by the ISD, sometimes what will happen, I am receiving some services, I am consuming them, and then I am delivering some other kind of services. So for example, if there is a rent of premises, right, and there is a head office, or say there is an office which is taking care of, say, sales and marketing, because head office, accounting, auditing, that is very common thing, right? So let us put some different scenarios. So there is a sales and marketing offices, let us say not even sales, only marketing offices. So what marketing offices is doing, it is like they are having their showrooms in different states of India. So what they are doing, they are getting the pictures of showroom and the products there. They are getting those pictures clicked, and then they are putting those pictures on the hoardings in the same city or same states. So that is the service which is being procured by the marketing office, but the service is received by the state office, the respective distinct persons, we can say. So if a service is just procured by a particular office and it is consumed by the different distinct persons of that office, then it will be an ISD. In any other case, if it is consumed by that particular office itself, that doesn't matter whether it's for or on behalf of the other distinct persons. Even in that case, if it is consumed by that particular office, it will not be an ISD. So if you want to cross charge it or not, that's a different issue, but it will not be ISD. So it means we will have to handle it in the different scenario. So ISD is having very small scope. Only and only when I am receiving and procuring services for some other branches. So if I talk about rent, because there will be a lot of confusion about different services. So instead of making a list like what will happen to this service, what will happen to this service, we should just try to understand this one formula, right? Just look at this one particular condition. If it is consumed by that particular branch, and then some other services provided to the different distinct persons, it's out from GST. So let's say rent. So for the rent, my employees are sitting in that premises. I'm not receiving that invoice on behalf of some other people. I am receiving the invoice and I am consuming this service also myself, right? So in that case, it will not be an ISD. In that case, we will have to cross charge it. That's my view.
Yes, Ashwa.
Yeah, to somewhat that distinction somewhere becomes very difficult because what the Shefali is saying is very correct. The first criteria is there should be third party service. The invoices should be of the third party received.
Is there some problem on his end?
Yeah, it seems like.
The camera is also blackout. I think there is some network issue. I think there is a network issue. He is not there. In the meantime, Avinash Bhai, you want to add something on this? ISD versus cross charge or something on cross charge in particular?
No, not at this point in time.
Okay. So I think for the time being, we then proceed till Ashwa Bhai again joins. So basically what I and Shefali ji are opining on this particular point is that this phrase for or on behalf has to be looked from the perspective of who is the consumer or the beneficiary of that input service. If it is the office itself who is receiving the invoice is also consuming the service, maybe then it may be further giving benefits to the other distinct person, then it has to be cross-charged. However, where the invoice in the first place itself is such that the beneficiary of the input service is the other distinct persons, like she gave example of advertisement services, or let us say, let us say there is a common security agreement for entire units, but the bill is raised in one entity. All such examples where there are beneficiaries or other entities also would come under ISD. Ashubhiya, you were saying something. I think there was some network issue.
Please I concluded that way. Basically, I was supporting what the Shefali is saying. Basically, I was putting out the conditions. Basically, when we have to apply the ISD, it should be third party invoice.
So it is a very good criteria to apply that the receiving of invoice and the receiving or consumption of services are two different places. Perfect. Pramoji, we can proceed.
But just one more follow-up question on that, Vishal.
Yeah,
Where is the
please.
cross-charge defined here?
Sir, there is no cross-charge coming from these provisions. Cross-charge is coming from Schedule 1. If there is any cross-charge. So it is only coming from Schedule 1. The only issue why we are discussing cross-charge parallelly with ISD is from 1st April, ISD has been made mandatory. So before this, as per Circular 199, there was a comfort with the industry that they could, as per their option or choice, use any of the mechanism. But now they have to put their fingers on and decide that, okay, for this expense, I have to compulsorily do ISD. Otherwise, the repercussions of not doing it will follow.
All right.
Yes. We'll be taking these questions. I think there are some questions in the chat box. I think we have discussed on this in general ISD versus cross-charge, so we can proceed.
I think next is how that ISD will distribute the credit.
Vishal, my request would be let us not mix ISD with cross-charge.
Yeah.
That will bring a lot of confusions and unnecessarily discussions. Because cross-charge is not a concept which is there in the law.
Right.
So we'll discuss it after discussing the entire ISD provision.
Yeah. So we are restricting only to ISD. Yes.
And
Section
just
20.
one question out of curiosity I'm asking, because I am not well read with these provisions and the amendments. What I want to ask is, how does it come that it is mandatory from 1st April 2025?
That will come from section 20. It is yet to come here. It will come in section 20, where they have said that you have to compulsorily distribute it. See, this is the part I've highlighted. Yeah. Yes, Pramodji.
Section 20 defines manner of distribution of credit by the ISD. Any office, which again is the ISD in this case, of the supplier of goods or services, or both, which receives tax invoices towards the receipt of input services, including invoices for RCM kind of supply, for or on behalf of distinct persons, referred to in section 25, shall be required to be registered as an ISD under clause 8 or subsection
of
8
section
of section 24, and shall distribute the input tax credit in respect of such invoices.
So the first part is the repetition of the definition of ISD, and then it is saying that such office shall be required to be registered. So this is how they are firstly mandating them to get registered separately as ISD as required under 24 clause 8. Plus they are also mandating that you have to also distribute the input credit in respect of such common invoices.
Yeah,
yes.
But was this provision not there earlier?
No, Bhaiya. There was the word used was may in section 20. So they have amended section 20 also. Earlier the word used was, sorry?
Where it is coming from? I'm not getting it.
What, the compulsion part?
Actually, I received this.
Yeah. So I'll just, if you want, I can open the earlier.
You go ahead with this.
Okay. Yes, Pramodji, subsection 2.
The 10th provision is the input service distributor shall distribute the credit of central tax or integrated tax charged on invoices received by him, including the credit of central or integrated tax, in respect of services subject to levy of tax, again the provision of RCM.
Yes.
Paid by a distinct person registered in the same state as the said input service distributor in such manner within such time and subject to such restrictions and conditions as may be prescribed, which will be coming under the rules.
Yeah. Now, this is a very important point I would like to highlight, because even till today, when I was reading one of the articles, I found there is some anomaly in understanding one of the aspects. Now, they have specifically added this point, that is where the invoice pertains to such a input service, which is covered under 9394. And now recently, the current budget has also added 5354. So somewhere I read, in fact, this is the third article today I was reading, that where commonly the author has said that the ISD is now allowed to make payment of the RCM tax. That is not correct. Even today, till date, ISD registration is not having that functionality in the portal whereby they can make payment of any tax. As I use the terminology, it is only a pass-through mechanism. You will receive invoice, you will get the credit, and you will pass on the credit. So there is no outward supply which is envisaged by the ISD per se, and that is why there is no option of payment of tax. Now, this issue was already addressed earlier, even before making these provisions compulsory, and now it has been incorporated in the law. So let us say I am an ISD. Let us now, for the timing, I am saying head office, which is Delhi. Now, I take some legal advice or legal services for which the tax has to be paid by me under RCM. Now, the problem is, as an ISD, I do not have the functionality to make payment. I am not having that option on the portal. The question is, what will happen for such inward services where the tax is liable to be paid by me as a recipient? For this, the answer is that every ISD will also have a regular registration, or I'll say you should take a regular registration also, even if you have an ISD. You will book that particular expense firstly in the regular registration. You will pay the RCM tax through your regular registration. And then as per section 20, subsection 2, read with rule 39 bracket 1A, read with rule 54 bracket, if I'm not wrong, again 1A, it says that this regular registration will first pay the RCM tax, will raise a cross-charge type of invoice on the ISD registration. So now the credit of this RCM paid tax will come and sit in the ISD. And now this ISD will be distributing this credit of RCM tax. So I just want to clarify, if by chance anybody else has the same common doubt, that even though the provisions are specifically using the word 9394, 5354, it is not empowering the ISD registration to make payment of any tax under RCM. That is why you also have a regular registration for the same office. The regular registration will be booking this expense under the RCM category, make payment, and transfer that through a regular invoice to the ISD registration, and ISD will follow the mechanism. This is now incorporated in the Act itself by virtue of Section 20 bracket 2, and the mechanism is given under Rule 39 bracket 1A, which I just explained to you all. Yes, Pramodji. Pramodji.
Yeah. Please.
We'll take questions later.
Subsection 3 is the credit of central tax shall be distributed as central tax or integrated tax, and integrated tax as integrated tax or central tax by way of issue of a document containing the amount of input tax credit in such manner as may be prescribed, which is Rule 39.
So we'll be dealing with the entire distribution mechanism from in the ensuing slides when we discuss Rule 39 in detail. Just the point which I have highlighted red, which I'll require Shefaliji's and Ashubhiya's input. Here, I personally feel there is some anomaly or mistake, because it says the credit of central tax can be distributed as central or integrated tax. That is agreed. That depends upon whether my distinct person is in the same state or other state. But when it says, and the credit of integrated tax will be distributed as integrated tax, or it is saying central tax. My understanding is integrated tax credit will only be distributed as integrated tax. It cannot be distributed as central tax. So I've just marked it as red. Just correct me if I'm not reading it or understanding it properly, because my understanding is it should not be your central tax. Any inputs, Shefaliji or Ashubhi, on this?
I think in rules they have written integrated tax only.
Yeah, in rules it is correct. That's what I'm saying. If I go to rules after this, there is no anomaly in the rules. So I just thought maybe either I am not reading something, missing something. So I just highlighted it so that I could check.
I think it's incorrect and it should be changed. It should be amended by.
But this should be removed, or central tax should be removed.
Yes, definitely.
Perfect. Fine. So now after this, we have to go to the procedure for credit distribution. Pramodji, I think I'll take it from here.
Yeah. So
you just stop sharing. I'll share from my end.
Okay.
Now, if I have to go to the rules, now Rule 39 is the parent rule which deals with the mechanism of distributing the credit. Now in this, I've skipped. Yeah. So when we come to the mechanism for distribution, which is provided in Rule 39, what does it say? It says that the credit of input tax has to be distributed in the manner and subject to the conditions which are provided henceforth. So Section 20 had said that distribution will be in the manner prescribed. The manner prescribed is Rule 39. Now 39 starts with the word, the first clause A says the input credit available for distribution in a month shall be distributed in the same month. Now, I believe already many of the practitioners who were in compliance practice were already finding it very painful for handling the regular monthly compliances. I'm sure this is going to add much more burden for you. I'll explain you how. See, your vendor will be filing his GSTR1 by 11th. So in your, now you are ISD, so it will be 6A because your GST return is GSTR 6. So like how for others you have 2A, 2B. For ISD, the place where you will see your inward invoices credit is GSTR 6A. So your 6A will be generated only after 11th, which will be 12th. Now, interestingly, your return, your means ISD's return, which is GSTR 6, has to be filed by 13th maximum. So please understand the watertight timeline which ISD has, it is only of 2 days. Because by 11th, your vendors would be filing their GSTR1. So whatever invoices they are raising on you, the credit will auto-populate and will start appearing in your GSTR 6A only from 12th. And since you have to pass on this credit to your other entities who have to avail it and utilize it in their 3B, you have to do it maximum by 13th, because 13th is the timeline for an ISD to file its return and pass on the credit. Now, this watertight timeline is going to create a big challenge, because you have to first check all the invoices, as what we do in case of whatever invoices are getting auto-populated in 2A, 2B, whether it is matching with our purchase details and all. And also, you have to be ready with the calculations as to what invoice, what credit would be transferred to which entity. You have to be also ready with the your uploading and everything. So I believe, Shefali-ji, it is going to be a big problem for entities which are having ISD, which is getting multiple invoices, and which are also having many entities, because the ratios may change, because certain input services may be pertaining only to 2 entities, certain may be pertaining to all entities, certain may come quarterly, certain may come monthly. So Shefali-ji, I think this particular ISD compliance is going to be a big problem for all these big corporates. What is your personal view in this?
Yeah, it's definitely going to be a huge problem. And the thing is, I will say personally, I'm unable to understand the rationale behind this whole provision. It's my input tax credit, even if I'm not shifting it to other branch. I mean, what's the problem? Let it go. But the thing is, just because it's just an additional compliance, right? And the provisions are not that clear, because see, the conditions for taking input tax credit at the receiving end are different. And here, the time when the credit will be due for distribution is different. So it's not like when it's a completely eligible input tax credit and it's completing, all of the requirements of an eligible input tax credit, then you will be distributed. They are saying that whatever invoices you are receiving, you are liable to distribute, and that too on monthly basis. So they are not required to make it mandatory. Like you will have to distribute it on monthly basis. It could have been like
Yes.
when you are eligible for the input tax credit, you distribute it. Now what will happen? Half of the incidents are happening at the end of ISD, and half of the incidents will be happening at the end of receiving party. So there will be a communication gap, because we all understand in the complex corporate environment, we already have a lot of the communication gaps. Sometimes a mail is going from one side, other person is not reading. Sometimes something is happening in the software, the other people don't understand. There are a lot of issues which big corporate can understand. There is always a communication gap in corporates, and sometimes the information may be laying for months just because one person missed it. So now, putting another lot of compliance, and then half information at the one part, half information at the other part, it's going to be a huge mess for the big corporates, I'm telling you. Because many consequences they will be able to understand only when they are going through the process of audit, or they are actually receiving a notice in the later date. And at that time, they will not be able to correct anything. So it's going to be a huge issue for all of them.
So that is what I also concur with you, Shefali-ji. Okay, making it, I just have slight difference in understanding. You said that you don't understand the rationale. I personally have a rationale in ISD mechanism. I believe that GST, since it is designed on the criteria of consumption-based tax, the ideology is that the tax should go and sit in that state where actually the services are getting consumed. Now, there is a possibility that it is a common service, like we are talking about security services, or let us say software services. In such cases, all my units which are in different states are consuming that service. But obviously, for all accounting and other reasons, we are taking a single invoice, maybe in head office, let us say head office. Now, following the ideology of GST, which is a consumption-based tax, or which is a destination-based tax, my rationale for understanding ISD is that ISD mechanism is required so that the tax should go and sit in the correct state. Okay, it may happen that the state may consume it in utilize it while discharging their output tax liability, but there is also a very good possibility that that credit may not be utilized in that particular state, and it may actually become the final revenue of that state. If ISD mechanism would not have been there, the entire revenue would have been lying only with the state of the head office or where the common invoices are there. So somehow giving a proper revenue distribution to the states, I believe ISD is brought in or mandated mainly for that particular reason. So taking ahead this particular point, now as you can see, interestingly, in all ISD related provisions, you find this word ISD, which is eligible, ISD, which is you are entitled. However, in this particular point, when you are talking about ITC, that is input tax credit, we are not seeing the word ITC, which is entitled, or ITC, which is eligible. They are using the word ITC, which is available. I believe the reason is what just Shefali just said. It may be a possibility that you may have received something. You don't know whether it is your credit or not, correct or not, but the invoice is for the time being raised in the name of that ISD. And as I said, you have only a 2 days window to distribute it. This is where I personally believe they should give some relaxation, that they should not mandate it that it should be distributed in the same month. So here, my question or my poser is there a difference between available, like I'll just put this poser. So is there a difference between available and eligible? I believe here it is available only. It is not eligible for the simple reason that eligibility, I think, is tested at the end of the final recipient, that is the unit to whom I'll be distributing. So since ISD is a pass-through mechanism, whatever invoices are received by the ISD, it will simply distribute it in the defined ratio. Whether eligible or not, whether entitled or not, I think that is now shifted at the end of the receiving unit. So here, this particular word available for distribution is, I think, very intentfully and purposefully introduced. I don't know legally how it will be sustainable, whether it is correct or not legally. Maybe Avinash Bhaiya or Ashu Bhaiya may share their views. But I believe that for the purpose of the pass-through mechanism, I think available is a more appropriate word than eligible. Any counters or any inputs on this, or how it can be a litigative issue if somebody wants to put their views on this point? No? Fine. Clause B says that whatever credit you are distributing should not exceed the available. That is fine. Now, this is again interesting clause. It says that the credit of tax on input service, which is attributable to the recipient of credit, shall be distributed only to that recipient, and which is attributable to more than one recipient should be distributed amongst them in the ratio of turnover. Now, what turnover and how, that we are going to see further. What is interesting is, if I go further, it says that in the numerator, it is a simple formula. I'll explain the formula. So C is the common credit. You multiply it by the turnover of the entity to whom you have to transfer, and you divide it by the total turnover. Now, total turnover is the turnover of all the entities who are the common beneficiaries of this service. Now, what is interesting is, in the denominator, when we are taking the total turnover of all the beneficiary entities, it is saying aggregate of turnover of all such recipient to whom such input service is attributable, that is all the beneficiary services, beneficiary entities turnover is taken as denominator. Interestingly, it is using the word which are operational in the current year. So again, this particular point, I had some queries in the last month when some people had come to me asking, sir, what is the meaning of this and how it will be applicable? So my understanding I'll share, others may enlighten, that why they have purposefully used this terminology which is operational in the current year. Because the formula today for distributing this common ITC is, you take the common credit, let us say represented by C, multiplied by the turnover of the entity to whom you have to give, divided by the total turnover of all the common beneficiary entities. Now, importantly, the numerator and the denominator turnover, as per these rules, is to be taken of the previous year. Now, it may happen that in the previous year, all your 10 entities were functional. However, out of those 10 entities, you have closed down one of the branches. Now, in the current year, when you have to divide the credit to one of the entities out of 9, the rule says you have to take turnover of the last year. Last year, you had turnover of 10 entities, but now in the current year, you will divide it by turnover of 9 entities, removing the entity which is now closed down or which is now not operational. This is why I believe they have purposefully used the word which is operational in the current year. Any inputs on this, Shefali ji, from your side?
I think, right, if a particular branch is not operational, so by this, what will happen? Any branch which is having a zero turnover in this particular period, so automatically the credit will not get passed on to it. But
But
again,
ma'am, we have to take last year's turnover.
that's why I'm saying,
Ha.
if it is not operational, right? If it's
Nee,
not
so how you are
operational,
interpreting
why will we
operational?
do it?
Nee, how you are interpreting operational? Operational means in this year they are having and not having turnover. Means the branch is in existence, but it has not made any sales. If you are saying so, they will
Right.
not get the credit.
No, that's another point. Like, what's the meaning of operational? They are not creating something or they are not selling anything.
My understanding, that is what I'm sharing with you, and that is why I'm taking everybody's view. That here I mean by operational is whether the branch is in existence or not. Whether it is having turnover or not, I think that should not be a criterion, because if we go further, I don't know whether we'll get that much time. Towards the end of these rules, they have defined, like here I have already highlighted this, who is a recipient of credit. Now, recipient of credit is one of your branch. So they have defined it in the rule itself. If you want, I'll just take to that point because I think that can be an important point. I'll just take you to that particular rule. Yeah. So they have defined these important terms. Now, who is the recipient of credit? It means the supplier of goods or service or both having the same PAN as the ISD. It means simply my other entities under the same PAN. They are the recipient of credit. Now, my understanding, read with the other provisions which we are going to come to, is that whether or not these people have any turnover in the current year, if they are existing, let us say my branch is there, only there is no outward supply from that branch in the current year, I think still the credit has to be transitioned. This is my view and my understanding of the word operational.
So, in other words, you are saying that if the entity is not registered anymore,
Yes.
then we can say it's not operational in
No.
every other case.
No, even unregistered. Again, I'll take you to the
Yes,
provision.
because distinct person include the definition in 25 that also includes the unregistered. If it's my
And they have made it clear also in one of these sub rules that it will also include those which are even unregistered, even which are making exempt supplies. I'm just missing that line. I think here itself. So answering your question, what you raised, that even if one of my branch is unregistered, or if one of my branch is making completely exempt supplies, even they are included in this. That is being clarified.
So then non-operational means like
Non-existent. This is my understanding. That is why
non-existent.
a combined reading of all these provisions is giving me that particular interpretation that operational, I am using the word existent. So if my branch is existing, whether making a turnover or not,
Whether
whether having
registered
an
or
outward
not.
supply or not, even whether unregistered, because that is clarified in one of the provisions. They have specifically said that even if unregistered or even if completely engaged in making exempt supplies will be given the credit. The
So
credit has to be transitioned.
in future that will be another problem. Now department try to prove us non-existent. In the future they will try to prove us existent.
Yes. So here that point is. So I'm just taking you to this point just to complete this discussion. So input credit that is required to be distributed in accordance with provision of clause E we were just discussing, to one of the recipients, whether registered or not. So they are clarifying it. Your recipient may be registered or not, from amongst the total of all the recipients to whom the credit is attributable. Attributable means I'll say the beneficiary of this service, including the recipient who are exclusively engaged in making exempt supply or are otherwise not registered for any reason. So they are making it very clear that the recipient of this credit may be an unregistered entity, may be an entity exclusively in exempt supply. All will be required to be distributed the credit. And this is where again I go back to my analogy, why you need this ISD, so that the credit should go and sit with that state where the beneficiary is. The beneficiary may be a non-GST entity. Like let us say I am having multiple verticals. One of my vertical is a petrol pump. Now you will find this in case of individuals or even HUFs that they are having multiple business under the same PAN. One of my business is petrol pump. Now, in that particular case, will I not distribute some common credit even to the petrol pump business that is outside GST? My understanding is you have to still distribute the credit to the petrol pump business, taking the turnover of the petrol pump, petrol diesel sale.
So Vishal, this is going to be a huge issue in the future because you know what happens?
No, ma'am, rules are going to make huge issue. Vishal is only clarifying what the rules are saying.
No, this will be a huge issue for the people, for the taxpayers, because you know what happens? Even if I am storing my goods at some place, say some warehouse, because there are many exporters who store their goods in, say, Mumbai, because port is in Mumbai. So department forces them to take a registration, right? So now when I'm talking about existence, like not even a permanent establishment which is required to take registration. Now I'm talking about existence, which is wider than the definition of that permanent,
establishment.
So now the department will find many locations where I'm existing. So sometimes I'm just putting some of the goods in a showroom. You know what happens? Like there are showrooms in the different places. I'm not selling. I'm just putting my goods. I will give you one example. In case of microfinancing entities, some of the microfinancing entities, what they do, they have their offices, the physical offices. Some are doing through the app. I'm not talking about them. The entities which are having their small offices or branches in the village side area, right? So what they do, the village people are visiting those offices. So they keep some of the goods belonging to the other manufacturers, say LED bulb or say a fan. They are keeping those goods. So they're just keeping those goods and
Correct.
they call it as a facilitation. They're facilitating, keeping those goods. People will see and they will buy. Then the invoicing will be done by the original manufacturer, the OEM. Right? I'm not doing the manufacturing. So it's just one example. There can be numerous examples when they are existing at some place, but they are not registered at that particular place because they are not having any permanent establishment. So I think in the future, this will also become the reason of a lot of litigation in these cases, because department will always find your existence. Now they don't even need to find an establishment, your existence. I mean, that is not something perfectly defined anywhere in the law. So it will be easy for them that anything you're doing anywhere, they will say, oh, you exist here. So now you also require to distribute your ISD credit to this location, which is not even a location in my mind.
Correct. I think that is stretching too far, but obviously that is many times the position taken by the department. But I personally feel that should not fall in this particular ISD. But you are saying correctly that this is how it is being looked into by the department. Now, this is one interesting question. I think we just discussed that whether credit is distributable even to a distinct person not engaged in any outward supply. I believe yes. So whether you are making any outward supply or not, I think you only raise this particular question. I believe as per the interpretation of all the provisions put together, whether actually there is any outward supply in the current year or not is not important. So far as your operational, which I'm interpreting as existing, that is the branch is there, whether or not there is any outward supply, I think credit has to be distributed to that branch as well if it is the beneficiary of that common service. Then clause E and F are basically defining about the formula. So where it has to be distributed to multiple branches, as I explained, the formula is this: C multiplied by T1 upon T, where T1 represents the turnover of that one branch of the last year. T represents the total turnover of all the branches, which are the common beneficiaries, and C represents the common credit. So this is the simplified formula. Now here there is a clarification given that you have to take this particular turnover of the relevant period. In the rules, they have used the word relevant period, and the relevant period is defined as the last financial year. Now, what will happen if in the last financial year, either I am not existing one, or if in the last financial year, I had only 6 branches and today I have 8 branches. So 2 new branches I have started in the current year. Now for these 2 new branches, I do not have any turnover in the last year. So they have even clarified this, that where any of the branches are not having any turnover in the last financial year, then for distributing the credit, you will not take the turnover of the last financial year. So first rule is you take the turnover of the last financial year. But if any of the branches, as I gave example, you have started 2 new branches in the current financial year. So if there is no turnover in the last financial year for these new branches, then you will not take the ratio of last financial year. So for this particular case, you will have to take the turnover of the immediately preceding quarter, preceding to your month. Now, again, it is interesting. We are still in the month of April. Let us say in the April itself, I have started 2 new branches. For these 2 new branches, there is no preceding quarter turnover also. Then how ISD credit would be distributed, they have not defined, because the last one option they have given is taking the turnover of last financial year. Second option is no last financial year, then immediate preceding quarter. But for new branches, there will be no preceding quarter turnover also. So my interpretation over here is then you should take the current month's turnover itself for the first 3 months until you complete 1 quarter. And once you have completed 1 quarter, then you can use that previous quarter turnover for distributing credit. This will apply only when there are new branches. This is my understanding of the formula. And then there are certain other points. First is, now this is important. If ISD has received certain credits which are covered under 17.5, that is, they are ineligible under 17.5, ISD has to raise separate invoice for eligible credits and separate for ineligible credits. Second, while distributing credit, whatever has to be distributed as CSI, it has to be shown separately in your invoice. Most important, ISD credit will be distributed as ISD only, whether you are distributing it in the same state to another entities or in other states. But when you are distributing CGST, SGST or UTGST credit, the rule given is if you are distributing this credit in the same state, then it will be distributed as CGST, SGST only. But if this credit is distributed to another state, so let us say I am ISD in Delhi, I have the credit of my renting service where the tax paid is obviously C plus S. I have to distribute it to my Delhi unit only, it will be C plus S only. But if I have to distribute it to my Mumbai unit, to my Ahmedabad unit, it will be going as IGST. So ISD having credit of IGST distributed within the state and outside the state as IGST only. ISD having credit of C plus S has to be distributed within the state as C plus S. But if it has to be distributed outside the state, it has to be distributed as I only. Then you have to raise invoice for distributing the credit. And if this credit has to be reduced in future, you have to raise a credit note. So the ISD will be first raising invoice and then wherever required, even raising credit note. Similarly, if the credit has to be increased because you have received some debit note from your supplier, you'll again be raising a debit note for passing on this credit. So these are some procedural points. Ma'am, I think since it is now 5, should we go to the question and answer, because other things are very mechanical and procedural.
Right.
So we have broadly covered the basic working also of the ISD, and we have highlighted some very important critical issues. I will request Pramod ji to take up the questions so that all the panelists present here can reply to them. Pramod ji, you can start with the questions.
Okay, I think some of the questions have already been answered.
Just a second.
Yes.
Before Pramod ji start, I have one or
Sure.
two aspects to share. One which I feel is, since there was a distinction drawn by Vishal Bhai that it is a consumption-based tax, therefore ISD has a rationale. I have a different view. Reason being, even in service tax, there was a concept of ISD, and that was origin-based taxation. It was not consumption-based taxation. So the way I will read this provision would be, and therefore I ask this, that how it is coming that it is mandatory? Merely because it is written that the word shall, that will not make it mandatory. As per me, it is still optional. I'll go with this reading that it is still optional. If I want to pass on the credits, common credits, see, ISD is a concept of common credit to be transferred. It is not a concept that wherein you can compel me to transfer the credits which I don't want to transfer. For example, let us take an example. If it is a branch credit which is engaged in supply of exempted goods, that credit is not available as per section 17, it goes. If it is a common credit, then proportionate exemption or proportionate reversal is there for the exempt supplies of distinct person. For example, there is a branch in Delhi. Delhi has a supply of exempt as well as taxable both. Then the proportionate reversal will be done. The only question which comes here is a common credit of the PAN, isn't it? Common credit not of the branch, but common credit of the PAN. We are taking it extended by reading this provision saying that now it is also to when a branch is receiving on behalf of the other branch, then it has to be distributed. Correct me if I'm wrong, Vishal.
Yes.
Or on behalf of, it means nothing but the same. That if there are 3 branches, 1, 2, and 3, and 1 is working on behalf or getting some services on behalf of 2, then also it has to be distributed. And both will, and one will have to take registration now, even if it is not HO. So what I mean to say is, number 1, consumption-based tax or origin-based tax will make no difference here as per me, because it's not about the consumption. It's all about the organization which is having a common input service which is being availed by multiple people having different registrations within the same PAN. So now the question is whether I want to distribute that or not. I will agree with the point which was raised by Shefali ji that it is my credit. The department or the law cannot compel me to transfer this credit and raise further litigations. If it is transparent and if it is easily and amicably transferable, then obviously everybody wants to do this. Nobody will dispute because that was in service tax also. Everybody used to do it. But now, since a lot of hue and cry is being created, there will be a lot of litigations. So I personally believe, and I personally will read, this is just a food for thought which I'm sharing with each one of us, because now we do not have time. It is already 5 and we have to take some questions also. Just a food for thought. Maybe we'll have a separate session for this. And I'll request Ashwa also to participate, because I don't read the law in which it is written. We have to read it, obviously, to comply. And if we have to comply, then we'll have to read it. As Vishal Bhai is told, whatever rule 39 is there, whatever formulas are there, we'll have to follow, because operational, exempt, there were a lot of issues which were being discussed. And a lot of questions arose because of that in my mind also, because I have not read, to be very honest, I have not read Rule 39 after amendment. But still, I would say there are a number of judgments which says where shall can be read as may. Let us evaluate and examine that as an organization, and then let us keep one more session wherein we can also suggest, or we can also say that it can also transpire to be read as may. And if it is read as may, then how do we protect those clients who are reading it as may? That is the only point which I wanted to share. And one more aspect, I raised a query that from where it is coming that it is applicable from 1st April 2025. First, this query was mine. And then I am sure that many of the listeners, many of the viewers in future will also have this query. So for that, I'm just, I'm entering into the segment of Vishal Bhai and Shefali ma'am, but allow me to do this. There is a notification 16 of 2024, which have substituted the original section 20. And after that substitution, they have said that this substitution will be applicable from 1st April 2025. The entire section has been substituted. And in that section, now they are saying shall be registered. So if we say shall be registered, so therefore the interpretation is it is mandatory. Just I wanted to add this. Pramod ji, over to you.
Yeah.
Ashwa Bhai wants to say something, I think. Ashwa Bhai ne mic chalu kiya tha, if he wants to add something.
Raj Bhai, if what you are saying, I agree with this. As an organization, we have to see. But what we have to understand in section 25, there is a concept of distinct person that we cannot deny. We cannot deny the transaction as specified in Schedule 1. If these two things are there, I think it will be very difficult to say that if I'm making an expense or I'm doing transaction for another branch, those things should not be transferred to that branch. Because the foundation of these transaction, ISD transaction, or if the process is not defined, is the concept of distinct person. Because in GST, it is not like income tax, I am a same PAN. They are making the whole life difficult, making it you are distinct person. So if that concept is there and that is not challenged or that is not disputed, the concept of distribution of credit challenge will be very difficult. What I think.
Correct. I agree with this. The only point which I wanted to raise was that in service tech, the same concept was there, wherein in service tech, there were two options. One, centralized registration, other branch-wise registration. And there also, when we were transferring or we were providing any services to the other branch, it was taxable. Branch services. So ISD concept, I'm only on the ISD concept, whether mandatory or not. That's it. Nothing beyond that.
See, there is a fundamental shift from the service tax to the GST. That was for the facilitation of the taxpayers.
Correct.
because they can utilize the input tax credit available at the head office. The
Yes.
concept behind bringing the ISD at that point of time was not the consumption.
Facility. Yes.
That was so that the taxpayer can utilize the input tax credit lying at some other place. But here in GST, the concept of ISD is not based on the facilitation of the taxpayer. It is based on the premises that the tax should reach to the state where it belongs, because there is a lot of dispute into that. And ITC is a major amount of the tax which has to be distributed between the states. That I feel, because the yeah.
Ashwa, there is one question which came to my mind just when you discussed this particular thing.
Shefali, give me one minute.
Yes.
Just I wanted to answer this, that even in service tax, it was not a case that if I am having a credit at Delhi and if I do not have if I have a liability in Surat and I can take that credit or get it transferred. No, the same concept was there. It has to be proportionately transferred. So it
has a proportionally transferred. Yes.
Therefore, the answer is origin-based tax or consumption-based tax does not make any difference.
Right.
What I am saying, I'm not saying the procedure is different. What I am saying, the basic approach of making the law, that is different. That I'm saying.
That I agree. 100%.
Actually, there was one thing which was in my mind. So, say if there is a registration, so which we generally, when we talk about ISD, we have a concept that ISD is someone who is not making outward supply themselves. That's the reason they have to distribute the credit. So now there is one important thing. If I am an ISD, and now in this particular scenario, ISD can also be a branch which is actually making outward supply. It's just receiving the invoices at the behalf of other branches. There is now one important thing. If as an ISD, I am taking some credit on the behalf of other branches and I am paying tax through the normal route, not taking an ISD registration, it means it was the input tax credit. It was the consumption of some other state and I actually ended it in my state. But now the thing is, if I am an ISD, I am not making any outward supply and I just don't want to claim my input tax credit. Can the law force me? No, you will have to take input tax credit. I don't want to take my input tax credit. I want to forego it. So law is not binding me to forego my input tax credit. They will be happy for me to do that.
One thing Vishal has very clearly spoken about. There are two parts what we are discussing. One, we are thinking as a taxpayer. The other part is the government and different state governments. And the major dispute between the state government and the central government is the distribution of the taxes. And when we talk about the distribution of taxes, it is not the only output tax, it is about the input tax credit also. And that distribution is based on how much input tax pertains to particular state, how much output tax pertains to that particular state. So to resolve that issue, that particular mechanism has been thoughtful in this GST law. Because even if I am making an exempt supply, I'm not required to distribute the ITC to particular state if it is exempted supply. But even then, that ITC pertains to that particular state. And that revenue of that state may be hampered because if that way is not distributed to that. That is my understanding. Because if we see from the revenue point of view, for the purpose of distribution of proper taxes between the states, the particular input tax should go to that particular state, whether you are taking that credit or not. That is a different part. That is my understanding.
I just had one line. Sorry, that Avinash Bhaiya rightly pointed out that earlier was origin and destination. So earlier ISD was also brought from the perspective of taxpayer, and now the ISD is brought from the perspective of department. So how we have changed from origin to destination, the ISD also is changed. Earlier it was a facilitation. Now it is for giving the tax revenue to that particular state. This is my understanding and interpretation.
Correct. Absolutely agreed.
Yes. There is one more interesting thing. If I don't follow the procedure, what will happen? 7374 will not be applicable on me because there is no
ISD. You means ISD.
ITC.
So you means ISD. You means ISD, or you means the recipient?
If I don't follow the provision,
of
if
ISD.
I don't do ISD, I let it forego. I let it forego. Like I forego my credit. If I don't follow it, 7374 cannot happen. There is no tax not paid, short paid, unnecessarily funded, input tax credit not wrongly availed or utilized. I will not fall there. So maximum they can do is a general penalty.
Yes.
Please correct me if I am wrong. So
this is my understanding also.
As a corporate, sometimes it can be also question to take whether I want to spend so much in compliances or if I just want to pay the general penalty for that particular matter.
No, but I think
Take one
70
example.
day 74 is applicable.
It will be applicable.
Will be applicable because now you are taking credit of the other branch, which otherwise you are not
Yes.
eligible.
She is saying I will not avail
ISD
also and I'll not
follows-
utilize also. I'll ignore that credit.
follow
This is what
the
she's
credit.
saying.
Entire credit.
Yes, this is what she's saying.
Then it's okay.
branches, they
तो
forego
कुछ
the
लिया ही नहीं कुछ लिया ही नहीं तो आप कैसे कुछ कर
Ah,
सकते हो?
exactly. So she's saying if the credit is not substantial and the cost of compliance is substantial, so she's suggesting another way, another pass through to
Shefali ma'am,
ISD.
Shefali ma'am, we are fighting cases here in Gujarat High Court wherein we have not availed any credit. There is a credit sitting in GST 2A of let's say 30 crore rupees. We have not availed any credit in 3B. Still the notice has been sent to us and it is confirmed by the authorities. They can do anything.
So litigation will be in both ways. If you comply, if you don't comply, there will be litigation.
No, but I concur to your view, Shefali ji, that if the cost of compliance is high as compared to the credit which is actually coming or will be benefiting my entities, because it may happen that certain entities may have block credits or they are into non-utilization phase. So why then I should take the pain of distributing? Instead, I will ignore that credit and I'll go without ISD. Yes. Pramod ji, I think we'll take up the
Yeah, I think there are many
They are
questions
very-
and many of them were answered as well.
So still you can just go through them so that we can answer all of them.
What is the meaning of liable to be distributed as per Act?
I understand that it should be read with section 20 that where you have taken common credit, you are supposed to distribute that credit to the other entities. That is what is liable to distribute in the definition of ISD. Yes, sir.
It is mandatory. Is it mandatory even if there are no transactions requiring distribution?
See, what I understand, I think myself and Shefali ji were discussing this. So if my entities are not having any outward supply, will it still be mandatory for the ISD to distribute them credit? Answer is yes, if they had turnover in the previous year. So if in the previous year the branches were having turnover, the credit will get distributed to them, even though in the current year they are not having any outward transactions. This is my understanding.
The company have two GSTIN and out of one is SEZ. Is ISD mandatory for this as well? Since,
this question, I'm understanding that are they asking whether ISD, the SEZ will have to take? I believe no. The DTA unit will take ISD if required. And I think if they want to ask that whether credit will be apportioned to SEZ also, I believe yes. So even credit can be apportioned to SEZ through the ISD mechanism. But I don't think the SEZ besides the regular should take ISD. The ISD should be taken by a DTA unit only. This is my understanding. Maybe somebody can add your views on this.
Same Vishalji, because there is no specific exclusion for
Yes.
SEZ. So it will be applicable on that.
Yes. Yes, Pramodji.
if I think if there are no any common expenses and taxpayer is having 3 branches, then still required to take ISD. Thing is no.
See, until unless you don't have any common input credit, there is no need of ISD.
Next
Simply
question is
because you have
also-
multiple state units, you need not take ISD until unless there is a credit. And as what now Shefali ji said, until unless you want to distribute the credit. So both things, you should have credit and you want to distribute the credit. Then only ISD is required.
What will happen to audit fees charged by a common auditor for head office and branch?
I think ISD should be used for distributing because it is common for all the branches. Yes, sir.
Can I cross-charge office rent to other branches or can take this under ISD?
I think Shefali ji took this particular example itself that rent is consumed by the head office itself. So where you are yourself consuming the service, it cannot come under ISD. So it has to be cross-charge only, but provided the cross-charge conditions satisfy, that is a different discussion topic. But it is definitely not ISD.
Answered this invoice GST and RCM invoice will be raised. You answered this also.
Sorry, sir, I did not. If it is answered, you may go ahead, sir.
Can I avail and distribute credit on quarterly basis or half-yearly basis instead of monthly?
So this is what we are suggesting. This is our suggestion to the council that they should come up with this relaxation because otherwise doing it monthly is, I believe, highly impossible because we have only 2 days window to do that, 12th and 13th, which will be very difficult task.
There is also quarterly filing of GSTR1 by some vendors. How to accommodate that entry if we have to file ISD return on 30th?
See, the moment it comes in your 6A, whether they are monthly or quarterly, that will not matter to you. You have to distribute it. So I think this should not be a big challenge. So even if there are quarterly filers, so once they file and you get it in your 6A, sorry, you will distribute it in that month itself.
What about clause 16C? In that this case, suppose the person who has provided invoice is shown in his GSTR1 and it reflects in 6A and we distribute, and later that person does not pay, then who has to reverse?
See, now there is a specific provision provided in 39 itself that where for some reason in future you have to reverse the credit, then ISD will be raising a credit note on the branches using the same ratio to reverse that particular credit. So it will issue credit note and all the branches will be reversing the credit in that manner.
Input transferred by HO to branch, then in what GSTR the ISD input will appear? Is it GSTR 6A or GSTR 2B?
See, it depends upon, firstly 6A and 6 is the returns of the ISD. So if let us say in this query, I'm assuming HO is the ISD. So when ISD is transferring, it is transferring from its GSTR 6 to the branch. Now the branch will be receiving the ITC in the 2A, 2B as it is normally getting. So 6A is applicable only to the ISD. So when vendors are giving invoice to the ISD, ISD will see the credit in its 6A. When ISD will distribute through 6, it will go to my branches in their 2A, 2B.
How recipient will decide eligible or not?
That's it. Is this the question?
No. After distribution, whether it is eligible or not, how the recipient would decide?
See, this is where I understand ISD is only a pass-through transaction because ISD is not going to check anything about eligibility. That is where I highlighted the word available in the month. So ISD has to simply see whatever credit is available in their current month 6A. They will simply distribute it. Maximum, if any credit is coming under 17.5, it will show it as block and distribute it separately. Now it will go to the respective entities and the entities will apply the eligibility criterion, whatever they are, and test whether it is eligible or ineligible. If let us say in future something happens, like for example, 180 days rule is applicable and ISD has not made payment, or if the supplier does not pay tax, like how was your earlier query, in that case, ISD will be giving the credit note, asking the entities to reverse that particular ITC. So it is going to be a very big tedious process. Because it may happen that you are, sorry, just completing, you are in the second year and now you are making me reverse the credit of the previous year, which was distributed. That year's ratio is different, current year distribution is different. So big challenge. Yes.
What if turnover is zero of distinct person, but the expenditure is incurred on behalf of that distinct person? Then is he eligible or not eligible?
Yes, you will transfer the credit. See, it may happen, forget about ISD. Today also, you have started some business, you don't have any outward supply. But still, if you are getting input credit, you will take the credit. Whenever you have outward supply, you can use.
What will happen when there is an addition in branch in the current year?
I think I answered this. Whenever there is addition in the branch in the current year, the challenge will be you will have to take the ratio of the current year for the first 3 months of the independent month itself. And then from the 4th month, you will take the ratio of the first 3 months, which becomes a quarter. Because when a new branch is added, there is no previous year turnover for these new branches. So the definition provided in the explanation has given this clarity. I had explained this at the end.
Pramodji,
Again,
there are, please take couple of points are there in the YouTube also. Otherwise, I can access that. If you
yeah,
will permit,
please.
I'll also take up that. How many
Please.
questions are remaining in your?
I think there are 13, 14 more is there.
So let me take one query of Dilip sir, because he has specifically called me. So there are some observations, Vishal and Shefali ma'am. Just I'm reading those observations. One is if you read section 20 clause 2 with 2 clause 61, that is definition, there is a mistake in the definition. If IGST is charged and it is to be distributed in the same state, it may be distributed as CGST. That is the view of Dilip ji.
Bhaiya, I think we have highlighted this. I have marked this in
We
my
have already
PPT.
discussed.
Yes.
We have
Yes.
already discussed this, but I'm just pointing out because
Okay.
he called me to read this. GSTR 6A may not be generated by 14. According to him, if we see Form 6, there is a provision for correction on the last day. So that is something which he is willing to point out. Then eligibility as per provision of Section 17 are to be decided by ISD before distribution. That you are
Hmm.
also saying the same thing, I think.
Yes.
You are only on that now. That
Yes.
available, if something is available in the credit ledger, then that can be distributed immediately. And then if something happens, then every organization or the credit note has to be raised. That is what you are suggesting.
Yes, this is my understanding.
Correct. But I'll say, in spite of the fact that the rule says that even if I don't or I'm not sure about the eligibility, why should I distribute? Again, that shall or may will come into play. But I would say, why should I distribute? I'll take that credit. Can recipient be unregistered?
Yes.
That is a
I
question.
pointed out that point, that whether registered or not.
Yes. If there is no supply as per formula, ISD can't distribute ITC. This is also what I also wanted to point out, that see, if the formula is there and formula has to be applied, that T1 multiplied by T divided by so and so, whatever
See.
formula was there, divided by T multiplied by C. So if we have to apply that formula, and if there is zero turnover, then it will be 0 divided by total turnover multiplied with, then the answer would be 0. So the question of distribution to that particular branch which was not having turnover, then you explained that there is a quarter. Then you explained that if the quarter is also not there, the earlier 2 quarter or immediately preceding quarter is also not there, then we should wait till the end of 1 quarter and then get it distributed. So that becomes a very tedious aspect. As per me, that compliance is impossible.
I have small input, Bhaiya.
Return नहीं भर पाते लोग. Where is the question of complying with this ISD provision?
I have small input.
I'll just complete. I'll just complete with
Sorry.
Dilip ji.
I just wanted to add on this.
Please.
I think this will not be possible, Bhaiya, because if my credit is appearing in, let us say, April month 6A, I have to distribute it in April month only, because if I try to distribute it in May or after 3 months, that will not be allowed by because there will be no credit in that month's 6A.
Exactly, that is the point. If the turnover is 0 and the entity was, see, even if the branch was there with no supplies, as Shefali was raising this story, so the distribution will be 0. You are right that the distribution has to be done, but distribution will be 0. Then rent of Delhi can't be distributed as two distinct person. Absolutely correct. Then one more last is, it is consumption based concept. That is what is being said. And then Mr. Shravan Kumar is also saying that Circular 199 clarified that ISD is mandatory. Circular cannot clarify anything.
No. In fact, Circular said that it is optional.
Yeah, it is optional.
Circular said it is optional.
Yes.
Acha, Circular is with me.
Yeah.
Sir, because Circular was issued before this amendment, na?
Correct.
Yeah.
Okay, fine. But these were the observations of sir.
I think majority we included in our deliberation.
Yes, we included almost all the things.
Pramodji, we can take the remaining questions.
Dilip sir is asking, can I speak? Yes, sir. If you can join on the Zoom.
Yes.
If you can join on the Zoom, then certainly you can speak, sir. We'll allow you to speak. Please join in the Zoom. You might have received the link from the registration. When you have done the registration, you might have received a link. Click on that link and you can join. Yes, Pramodji, take another question.
For NBFC in microfinance sector, who has say 10 branches in Maharashtra and 4 in Gujarat, input service is mainly loan processing fees and software services levied by bank and IT company. Where do NBFC need to take ISD registration and which ratio the ISD needs to be distributed?
NBFC will be taking registration, ISD registration at a place where they are taking that invoice. So that will be generally their main some corporate office, and from there they will be distributing it to all their branches. What was the second part of this question about turnover, Pramodji?
No, there is. And in which ratio this ISD needs to be distributed?
So the ratio will be the ratio of interest, I believe, because only interest is the turnover portion. If there is no other thing, or maybe if there is some processing fee also.
Yeah, charges and
whatever is supply, because turnover will be made up of supply. So until and unless there is any supply transaction, there will be no turnover. So no supply transactions will not be coming in turnover. It has to be a supply, maybe taxable or otherwise. So it will be the interest and the processing fee turnover of every entity, which will be the ratio. if I have understood the query correctly of NBFC.
What about debit and credit notes? Because the law says tax invoice.
No, law is also means whether it is from supplier side or it is from ISD side, because on both sides there will be debit note, credit note. Even I will receive a debit note, credit note from my supplier, and I will be issuing debit note, credit note to my recipients as ISD.
What happens when the credit has been passed in excess to one branch instead of the other? Should this access has to be reversed through DRC?
Yes, Rule 39 has provided that also towards the end. So if in future, like what Shefali was pointing out at the start, if I find after 2 years that there is some mistake at my end, I have to correct it. Now, the only challenge is that if this is identified after the 16/4 period, so can I now correct it? And obviously, I have to correct it as ISD, but will my recipient branch, whom I did not transfer the credit then, will it be still eligible to take the credit under 16/4? Here, I believe that there will be a challenge because my original invoice was pertaining to an earlier period, and 16/4 is applicable from the date of invoice. So first question is that I will be correcting this by raising a credit note for the entity from whom I have to reduce the credit. But yes, Shefali ji, I think 16/4 should not affect, because if I have to give extra credit to another entity to whom I failed to give, that will be by a fresh invoice, not even a debit note. So I think even if I correct it after 2 years, the recipient entity should be eligible for this credit. Correct, na? Because it will be, the rule says it will be with another invoice. I have to raise another invoice for distributing or making this correction. Yes, Pramodji. So it is provided in Rule 39 that I will do the correction by changing the ratio and issuing a credit note to one entity and a fresh invoice to another entity. Yes, Pramodji.
Then question is refund of compensation cess on coal used for manufacturing steel available under inverted duty structure?
Sir, not relevant today.
Not
Sir. We
related,
can
yeah.
skip this.
Yes, it is available.
Okay.
Take time now.
In case of a trading company, it has 5 branches in 5 different states. All major expenses were booked at HO considering amendment. Whether input service of say bank charges, professional fees and other common expenses need to be charged by HO to respective branches in proportion to the turnover of the company. In this case, registration and return need to be filed by HO only. Right. Yeah.
Now, bank charges, if the bank is a common bank for all the units, then you can transfer using ISD. But if it is the bank only of HO and each unit is having its separate bank, then I don't think this bank will become a ISD expense, the bank charges.
Yeah, even same for
similar-
professional fees also.
But if again, now it depends, professional fees is of what nature. So I
Yeah.
think we'll apply what Shefali ji and Ashubhai had said, that if consumption and receiving is the same person, then it will be not ISD. So
Okay,
we'll have
I
to
have
check.
I have 2 branches, one at Mumbai and second at Bangalore. Both branches have outward tax liability. Still ISD applicable to me. I think yes, if you are taking a booking invoice on
ISD has
behalf of-
nothing to do with the outward side.
Yeah.
It has to be if we are having common invoice in one branch. Yes, sir.
No transaction of distribution of tax is ISD registration required. We have answered.
No, they're not required. If there is no common expense to be distributed, ISD not required.
Whether 54(1)A invoice has to be reported in GSTR1. In my view, no, because it is not an outward supply from the regular GSTIN to ISD GST.
Sir, 54(1)A is that invoice which I was mentioning that, see, understand this. I am a head office having a regular registration and an ISD registration. Now, head office receives a legal advice or legal service for which tax has to be paid under RCM. Now, for this tax, I will use my regular registration to pay the tax under RCM and to transfer this to the ISD because it is a common expense to be distributed to all. I will raise a special invoice which is provided under 54(1)A. Now, if I'm raising that specific invoice, I believe it has to be reported in my 1A so that it will go to 6A of the ISD. And only when it goes to the 6A of the ISD, it can distribute it to the units. So if I've understood the question correctly, that 54(1)A invoice has to be reported in the regular registrations GSTR1. So first, regular registration is paying the tax under RCM and it will be raising a invoice on the ISD registration and reporting it in the GSTR1. This is my understanding.
only statutory audit fee is incurred, no other such expenses, then ISD registration is required or no?
No answer, sir.
Okay.
I think question incomplete, sir. You may
If
proceed.
DTA is taken, ISDs, SEZ are forcefully have to take credit of output if output is nil. We have also already answered this question.
Yes.
Pramod ji, abhi, it's already 5:30.
Yeah.
Yeah, I
Dilip
think
sir,
we have completed all questions also, majorly.
Dilip sir
Yeah.
has already joined, so I think we should allow him.
Yeah,
Yeah.
please.
He can speak whatever he wants, and then we should close because time was till 4 to 5.
Yes.
Yeah. But we have answered major questions.
Yeah, major questions have been answered. Still, if there are any questions, then individually offline it can be asked.
Yes, people can.
Yes, sir,
Yes.
if you can unmute and start, what do you want to share?
Good evening.
Good evening, sir.
Thank you, Avinash, for allowing me to speak.
Yes, sir.
First of all, the basic question is there is a definition that ISD has to receive all the invoices of RCM is totally wrong. Basically, because there is no payment facility given to the RCM. Then in that case, if they receive RCM invoices, there is no question of they paying the, and if you see 54(1)(a) as well as 20 subsection 2, you will find out that the amount of RCM is to be paid by the, let us call it as head office, right? So when it is to be paid by the head office will prepare the bill on ISD and ISD will distribute it. That is the first thing. So there is a basic problem in the definition of the ISD itself. Secondly, if you see the definition of ISD, the definition clearly says it is for the purpose of distributing the amount of common credit invoices received by ISD. So there is no question of distributing common credits unless until it is received by some distinct person. Secondly, Avinash and Vishalji, you said that it is not consumption-based tax. It is a mixture. But see, basically, unless until the person has utilized that particular service, you cannot transfer the ITC to him. So let us take a simple example. If I am stitching uniforms for the, let us say, 100 people of Bombay and let us say 10 people of Delhi, I get the ISD invoice for 110. Can I distribute it according to the turnover? So according to me, if you read 39 distribution rules, point number A says that it should be distributed to a single person. So according to me, if I am wrong, Avinash will help me out. Singular includes plural. So basically, if I want to distribute it in the fashion of 10:100, it is possible. So unless until there is a consumption and I am entitled to the ITC,
Correct.
ISD cannot distribute the ITC. That is the basic. And one more thing, there is going to be a lot of problem. Now I am going to give a lecture on 9th for the institute on ISD and cross charge. So basically over there we will find out that the basic purpose of ISD being introduced as a compulsory is giving the authority for distribution. Now, even in my client cases, they were using cross charge for the purpose of distribution. But according to me, now cross charge is there on the 8th, I think. Am I right? Now, in the cross charge will be used when there is a question of distributing the ITC of inputs, capital goods, and services. So, ISD should be allowed to distribute the credit of the services. Now, I don't have, because my questions were there on the, now, see, basically, what is the date on which we will prepare the invoice? Whether it will be the date on which I receive the invoice from the supplier, or it will be on the 30th of the month, that is the last date, or it will be on the 14th when I am distributing. According to me, the invoice is to be prepared on the date when I receive the supplier's invoice. So what happens now? Whether it is there now, just like 2A, 6A is a dynamic, and 6A will be showing me the invoices when they will be received. So if it is e-invoice, it will be appearing on the same date. But quarterly filers, they will be showing it on 13th. And now today also, we are getting 2A and 2B only on 14th. So according to me, whatever I want to distribute, if you see form number 6, the particular third table is for giving you the details of the invoices for which you are distributing the credit. And after that, there is table number 7. If you see table number 7, whatever mistakes you have committed for the purpose of the distribution, you can correct them in 7. So prepare the invoice when you are receiving the invoice, and then if there is any mistake, mismatch, correct it in 7, and it has got plus as well as minus. So let us say, take a simple example. Avinash, how much time I have? Because if I go on speaking, it can go on for half an hour.
So I think because today we have already crossed the limit. So what
Right.
I have already suggested to my team also that we should arrange a separate session for discussion of the litigative aspects also. So at that point in time, I'll invite you officially so that you we can take the advantage of your knowledge also.
So when you are having the cross charge, I'll join you so that whatever inputs I can give you. Now regarding only one point.
Cross charge, I'll contact you very soon because we are challenging this provision itself. So I'll be contacting you very soon, sir.
Okay.
So I think Pramod ji, you can give the closing remarks. I think we have completed everything.
Thank you, Dilip sir, for all the insight that you have shared with your experience and learning.
All right, sir. So I think with that, we have come to an end to today's session. So on behalf of Ashwa Legal and myself, Pramod, would like to thank all the participants who joined for today's session, along with all the panel of speakers who were giving their exclusive knowledge about the ISD provisions, which is certainly a very discussion points in today's scenario. And as Avinash said, we will schedule one more session on the litigating aspects of these provisions along with cross charge. with that, thank you very much. And
It's already in our calendar. So we have monthly calendar of Ashwa. It's already there. One session on ISD is already there in our calendar.
Yeah.
the
So,
next,
ma'am, what is the date? Can you please inform the everyone? So I think it is the third week, if I'm not wrong. It is
Yes, third.
third week. Third week. Yeah.
all right.
Thank you, everyone.
Thank you,
Thank you,
everyone.
panelists.
Thanks,
Thank you,
everyone.
Dilip sir.
Thank you so much.
कोर्स में
Thank you.
Thank you.
हाँ ग्लोबल जो है ठीक है हो जाएगा वो तो ओपन टू ऑल हो जाएगा